Good afternoon, ladies and gentlemen. Welcome back to the Public Service Commission of South Carolina. We're here in docket number 2021-153E. Present in the hearing room are Commissioners J. Williams, Caston, Powers, Belzer, and C. Williams. Joining us virtually, we have Commissioner Thomas. Before we had our lunch recess, we were in cross-examination with Mr. Sorensen, Office of Regulatory Staff.
Thank you, Mr. Chairman. Good afternoon, Mr. Sorensen.
Good afternoon.
And I believe you covered this with the DCA's attorney, but you have not been qualified as an ROE expert in this case, correct?
That's correct.
And you have never filed testimony evaluating the return on equity or cost of equity of a utility company, correct?
I have not.
And you would agree that you are not an expert qualified to evaluate and make a recommendation regarding an appropriate return on equity for a regulated utility, correct?
I'm not an expert, yes.
In your rebuttal testimony, you mentioned the ROE granted to PWR in its last rate case filed in 2018, correct?
Yes.
Are you aware that the ROE this commission authorized for PWR in its last rate case resulted from a settlement agreement and not a fully litigated hearing?
Yeah, I think so. Yes.
And are you aware that the settlement agreement in that case has language stating it does not establish precedent with respect to the issues resolved therein, and in no way precludes any party from advocating an alternative position in a future or concurrent proceeding?
I've not reviewed it, but that's standard language.
And are you aware that capital market factors that impact the cost of equity for all utilities, including PWR or Palmetto, have changed since PWR's last rate case was filed 3 years ago?
I couldn't comment on that.
Am I correct? You cannot comment because you're not an expert?
That's correct.
And you are familiar with PWR's sister company, which is now named South Carolina Water Utilities, PUI Inc., correct?
Yes.
And are you aware the ROE authorized for PUI in August 2020 as part of an approved stipulation was 9.07?
Yes, I believe that's what we found.
And are you aware that ORS witness David Garrett has recommended an 8.9% ROE in this case?
I am.
And would you agree that 8.9% is 17 basis points below 9.07?
It is.
And am I correct, PWR witness Mole has recommended a 10.95% ROE, correct?
Yes, he has.
And would you agree that 10.95% is 188 basis points above 9.07?
I would have to do the math, but I'll take your word.
On page 4 of your rebuttal testimony, you of course have a table with ROEs granted to affiliates of PWR recently by state regulatory agencies, correct?
Yes, sir.
And the most recent case listed on that table is for Monarch Utilities 1 LP in Texas, correct?
It is.
And the ROE authorized in that case was 9.0%, correct?
Correct.
And would you agree that Mr. Garrett's recommended 8.9% is 10 basis points below 9.0, whereas Mr. Mole's recommended 10.95 is 195 basis points above 9.0?
I'll let you do the math, but yes, I think so.
And Mr. Storms, would you agree that the ROEs awarded for each of the utilities listed in that table, with the exception of NY Florida perhaps, were the result of a settlement rather than adjudicated decision?
I can't comment on those.
Ms. Hare, will you please email out cross exhibit 1? Is the makeshift Elmo working?
Yes, sir.
Thank you.
Yes, sir.
The table at the bottom. And I'll represent to you, Mr. Sorensen, this is a information request response, ORS, received from the company, where we requested information on these cases. And looking at it, would you agree that it indicates all those cases except for Nye, Florida, were settled?
Yes.
Do you know whether the Nye, Florida case was settled?
I do not.
And column B there provides information on what the recommended ROE by PWR in those cases was. Do you see that, Mr. Sorensen?
Yes.
And would you agree the recommended ROE in those cases, the ROE recommended by those affiliates, of PWR, range from 10.0 to 10.75%?
Yes, that's the range of that column.
And your table in your testimony has the awarded ROEs. And subject to check, would you agree that on average the awarded ROEs in these 6 cases were nearly 90 basis points below the ROEs sought by these affiliates of PWR?
Oregon looks to be 40 basis points.
Well, let's say,
South Carolina water utilities 2.5.
we can walk through them.
Yeah, it might. It might. It might be.
Would you agree then that Mr. Sorensen, these examples illustrate that affiliates of PWR regularly seek ROEs that are significantly higher than the ones awarded in the cases?
Yes, I think the affiliates have requested ROEs and then settled, as you point out, on lower amounts based on several factors.
Thank you, Mr. Sorensen. I have no further questions, and I would request that this IR response be made a hearing exhibit. And I have the complete response.
All right. Could you identify that document again for me, Mr. Huber?
This is PWR responses to South Carolina Office of Regulatory Staff's 15th and continuing request for books, records, and other information.
All right.
Mr. Chairman, just one,
Does he want the entire response or just the particular table in question?
I think he's asking for the entire response.
I wouldn't object to putting the table in. I don't think the entire response is necessary. It covers a lot of other things.
Well, my concern would be it's an incomplete document at that point.
Do you have it with you?
I do.
May I review it? Mr. Chairman, I really don't want to belabor this, but there are 12 questions, 2 of which pertain to Mr. Sorensen's testimony. The remaining questions seem to have to do with Mr. Mal, our expert witness's testimony. And I don't see where it would be incomplete to the examination to simply submit question 1512, which is the one Mr. Huber was referring to and which contains the entire table.
Mr. Chairman, will agree to just submit that, the response to 1512.
Thank you.
Which would be pages 7 and 8 of the cross-examination exhibit that were emailed out.
ORS Cross-Examination Exhibit 1, pages 7 through 8 will be marked and entered into the record as hearing exhibit number 4.
Thank you, Mr. Chairman. No further questions for ORS.
All right, thank you, sir. Commissioner, questions for this witness?
Mr. Chairman.
Vice Chair Belzer.
Good afternoon, Mr. Sorensen.
Good afternoon.
I believe on cross-examination from the Department of Consumer Affairs, you agreed to amend a portion of the tariff that was in the application, talking about, I think it was a 34-cent reduction for 3 years. And am I correct that that 34-cent reduction related to Tax Cuts and Jobs Act returning of collected taxes
Yes, yes, ma'am.
from before Southwest took over the
That's
utility?
correct. That's
Okay.
correct.
And there's 1 year left on that reduction, is that correct?
I think it's about that.
3
Yes.
years from May of 2019, so
yeah.
it's through May of 2022,
Yep.
is that correct? And you do agree that that's applicable to all rate classes, not just
Yes,
commercial?
we do.
Okay, thank you very much. That's all I have, Mr. Chairman.
Commissioner Caston.
Afternoon, Mr. Sorensen.
Afternoon.
I have a few questions, mostly to educate myself on PWR and Southwest, I guess. Southwest acquired the current wastewater facilities, service area and all, in September 2020, correct?
Yes.
Was the condition of the existing system factored into the acquisition price? Is that how you do that?
Yeah, we look at several factors in an acquisition price. Condition of the facilities would be one.
What was the condition of the system before it was acquired?
You know, it's difficult to say with one number or one. It needed work, and some work still remains in the collection system. We identified some safety improvements immediately that we took care of. There was some work that was underway already to address some of the issues that the utility owner of the time already understood. So it was in decent shape. I won't say it was terrible. I won't say it was great, but average would be good.
Whatever average is.
Yeah.
Does the company contract out operations and maintenance?
We do not.
So it's all with PWR employees?
Yeah, we generally operate and maintain the system. There may be specialized repairs or something like that would, we would need to contract out, for special services.
How many employees do you have?
So in South Carolina, we've got 78 positions in South Carolina, 54 in the Midlands area.
So,
And those utilities, or those employees serve our utilities in the area.
so is that 54 employees just for PWR? Okay.
That's for PWR and Palmetto and all of our business in the central part of the state.
Okay, because I saw somewhere, I think there was about 1,700 plus customers for PWR.
Yes.
So total in that area you're talking about, this 54 serves, about how many customers?
Let's see, 54 serves 30, I think it's 37,000 customers.
$37,000, is that's accounts, that's meters, or
That's customers.
Customers? It's almost like you knew I was going to ask this question, so that's about 685
And I,
customers per employee?
so let me restate that 37,000 is for the state of South Carolina. That would be more applicable to the 78 positions that I mentioned. You know,
Okay.
as far as customers per employee, that changes from time to time based on employees moving up or down, customers coming on or off, that sort of thing. But I think the number that you're looking for is last I saw was around 440, 450.
Is that one of those things? Well, it gets me to a question I was going to ask you then, as far as what metrics do you manage by? In other words,
Sure.
every utility think there's, well, I should not say it that way. Is PWR a well-run utility,
Yes, I believe it is.
ran efficiently?
I think so, yes.
Well, based on what in the testimony would tell me that?
So I think we have several things that would indicate that. I think first of all, you have the lack of customer complaints about service. You always look to employees and what sort of service they can provide our customers. So I think you look at that. I think you look at are we having injuries? For our employees? Haven't had any of that. We've invested $2 million worth of capital, and so I think those are indications that the utility is doing what it should be doing.
Do you have metrics that you kind of manage by that kind of tells you whether you're doing well or not well?
So you look at when you're running, and you know this, you look at lots of different things, and you look at your financial metrics. You look at turnover, what sort of environmental impact have you had, safety, training, we track our training, hours, for, are we doing the safety training that we need to do? Beyond just the weekly safety, talks that we have on various subjects that come from week to week, we also have, third party come in and lead in confined space, training, and we have a defensive driving class that every driver goes through. So you look at really what are you doing to progress the utility, and what steps are you taking so that you have the outcome that you want, and do you want what are you doing to proactively reduce turnover? What are you doing to proactively reduce lost time? What are you doing to proactively reduce customer complaints? And so you look at those things and what drives those, what were the drivers behind those numbers? Because it's easy to look at a number and you know it too, Commissioner, that it's difficult to compare utility A to utility B. There are different factors and different designs and different customers, different processes, different permits, different, lots of things that make it difficult to compare apples to apples. But I think you generally look at some of those metrics, and we track those, and I report on those to our management team. What sort of training have we done? There are various fallout metrics that you look at. You mentioned employees per connection. That's one thing. You can also look at how many miles did you drive per connection. How many, and then really the number, I think, is probably less important than the trend. And so you kind of look at that. Management is an inexact science, as you know, but you take those things and look at them.
But you understand that the customer is pretty much solely relying on how well you guys do. Whether they don't know whether you're running it well or not, whether it's efficient or not, if you hold down cost.
Mm-hmm. So what they do see is the one complaint that spoke was just about the rate, not about the service, but about the rate. And so what do you do to keep the rates down, and is that competitive? How do you measure? And again, it's difficult to compare utility A versus utility B, but PWR does have very low rate, and we're proud of that. And I think that's an indication that subject to all the audits that we just went through, that we're managing costs and keeping costs down to where the utility is able to offer a low rate.
Along the lines of, I guess, safety, you'd mentioned safety, now I know on page 5
Mm-hmm.
of, I think 5 and 6
Mm-hmm.
of your rebuttal, you talk about the values in 1 through 5. And I, just noticed, like on the bottom of page 5, you list safety with just a bullet and then start on 2 on the others. Did you intend to list safety as number 1 of the 5 that you have listed?
So there are discussions about, and different people view it different ways. But I view safety as the first thing that you got to do. You got to do it. You got to do your job safe. If you can't do it safely, then everything else kind of falls apart after that. So I think that's how I view safety.
Well, I mean, it's just minor, but my only point being is in the testimony itself, at the bottom of page 5, you do, our values are, number 1, job safety, but then you discuss them below, and safety, you just use a bullet, and you start number 1 on environmental stewardship.
Yeah.
So what I was asking is safety that number 1, and environmental, not that that's necessarily in any priority order, but is that what the intention was, or?
No, just that's the order I think of them in. I think of
Okay.
that's just the order I view them as. I think you have consultants, right, and every pillar is equal. Well, to me, it starts with safety.
promise you, this isn't a trick question, but I was thinking about it in all the earlier discussions. Do you lead the company based on maximizing the RRE or operating efficiently and holding down the cost as much as possible, or both?
Well, I think, you know, the rate is what the rate is, right? And so I can't control, you know, really the revenues so much, but I can be efficient and I can do things, you know, what can I control? And so you look at efficiencies and operating smartly. You know, can you invest in the system, make it more resilient so that you avoid problems down the road? You know, what can you do to reduce I&I into the system that would, you know, then have further implications in reducing operational costs into the future? And so you look at those things, and really that's, you know, the revenue is what the revenue is going to be, and I focus on the other. And then there's a fallout, obviously, you know, calculation of ROE, what that actually would be.
I'll come back to that if you don't mind, but I was thinking in terms of looking at some of the projects you'd had listed though, just generally, and I think ORS witness kind of addressed some of those, because to me some look like more like O&M rather than capital. But I was curious, you know, when I asked you about the system, what the state was in, because I saw we were going to do, I think, doing 2,400 linear feet of,
Right.
I guess, collection line, 140 feet of trunk line. How many linear feet of collection line is there in the system, roughly, approximately?
Commissioner, I'd have to get back to you on that.
What is that? Do you know if that's
It's a small-
10% of it?
No, that's not 10% of it. You know, I think when you think of the 10% number that you're going to, you know, that's really what you want to look at. You want to look at 10%. Maybe you want to evaluate 10% a year, something like that. But you wouldn't replace 10%.
Well, let me tell you what I'm really trying to get to, or trying
I'm
to
sorry if
get
I'm
my
missing the point.
No, you're not. I'm just doing a poor job of asking it. You know, you're familiar with the term entropy. In essence, left to itself, things just go to heck. The chaos. It just, and that's the same way with any utility or anything else. So what I'm trying to understand is if these improvements, and I saw where you were replacing some pumps and I guess fixing some blowers and such as that. If these improvements are going to perpetuate the system, or is it the kind of thing, come back in 3 years, 4 years and say, man, this system's worse than we thought, or you know, we've got to do all these things. Just kind of trying to get a feel for that.
All right. So no, I don't think the system is worse than we thought it was going to be. I don't see something like that out there. I think there are things that we can do to improve the system over time, and we're working towards those. You know, you look at you know, some of the things that you know, described as possible O&M type expenses as opposed to capital expenses, and I get that as well. But for example, the brush aerators, you know, they've got a lifespan, and so, you know, it's not just rebuilding them and replacing them. It's, you know, essentially getting new rotors out there. So it's, you know, it may seem like maintenance, but and the accountants don't like it when I say this, but I view there as you know, there's such a thing as capital maintenance, you know, and that when something is you know, depreciated or you get to the point where it's mostly depreciated and needs to be replaced, then you know, that's something that you invest in a new or rebuild or address the issue, and if it meets the other criteria of extending the life or you know, a minimum threshold, that sort of thing, then it becomes capitalized.
And I noticed, just out of curiosity, I think you had like a 2 MGD wastewater treatment plant, about a 0.2, 0.3.
Yep.
Just, are those lagoons, or what type of treatment is that?
So PWR has really two facilities. They've got a 2 million gallon mechanical plant, oxidation ditch with clarifiers and that sort of thing. and then there's a small lagoon also. And they're both nearby and serve the same area.
Okay. That was, I just read 2MGD, my first thought, well, what kind?
Yeah, yep, I understand.
Final couple of questions, and these aren't trick questions either, but relative to the RE, because, you know, interesting conversation.
Sure.
While there are other factors, is not the level of risk a major factor in ORE
Yes, I believe it is.
or
ROE.
ROE? Then, if a utility is well-run, in good shape financially, anything else, is it not, I guess, normal or maybe to be expected that an RRE might be less? Because I kind of think about the blue chip companies, you know, those slow, steady,
Yeah.
you know, no, you're not going to get the 15% rate of return, but you can bank on them just about. Or you can roll the dice and go in junk bonds or risky stuff. And what I'm hearing is PWR seems to be well run. So is it reasonable to expect that RE would not be higher than lower?
Well, I think when you think about ROE and the margins that the utility needs to make in order to meet its goals of serving the customers and investing and forward-looking things that the utility does, I think you have to look at what sort of structure are we in, you know, here within the state, for example. I think I mentioned that our affiliate in California is authorized currently a 9.25% ROE, and they've got, you know, things that and protections in California that we don't have here. We have a historical test year, for example, and looking back over the last 12 months, what's the CPI done? You know, what's inflation doing? What are those things that have occurred since the test year that maybe don't show up in the audit, and that you know, we're preparing to you know, have to deal with for the next couple of years. And you know, last I saw, and I haven't looked to see what it's been for the past you know, what it was this past month, but I think the CPI is running about for the Southeast is almost 6% over the last year. So that's just, you know, the general basket of goods and services that the U.S. Bureau of Labor and Statistics puts out. But so I think you have to look at you know, risk in the sense of yeah, we have customers that you know, need to pay us, and we have that, but there's also, you know, the uncertainty of you know, what's going on in the economy, what's going to come, you know, what's going to break, what's going to, you know, you can do all that you do to be proactive and to plan, but then something goes bump in the night, and then what do you have? So I think those are things that you you know, need to think about, and things that I think about when looking at margins and those sorts of things.
I understand. But I guess when I think about things go wrong with the economy or whatever, which I think we both live long enough to know that happens on occasion.
Sure.
That it typically goes wrong for everybody. I mean, you know, there's always, seems like some group that does well in this economy versus this one and all. But generally speaking, when things go south in the economy, it seems to affect all. And looking at, I think, page 3 and 4 of your testimony, you know, where you talk about, I think, Rothschild appears to have provided cost of capital testimony. Let's see. Talking about the return on equities of these other three cases, and you say, given the same level of risk, investors will invest their money where it can earn the highest return, which I guess my first thought, and matter of fact, I wrote it here, based on what you say is the same level of risk. In other words, if those companies are equally as good as PBR, I'm sorry. I made that same mistake back here, and I wasn't gonna make it out. PWR. Then probably it would make sense if all things were equal and, in the same general area and the same market, the same industry. Because one thing I've kind of learned that every single day people want to drink water, or at least have it, no matter what the economy is. But that statement, given the same level of risk, investors will, that would still have to assume that these other utilities or whomever was listed were equal to or better than PWR as far as running their company, or that they're that good and their stability financially and everything else is that good. That only point I was gonna make. Do you agree with that at least?
Well, I think, and I don't get an opportunity to brag on my team very, very often, so I like to do that whenever I can. I'd put my team, up against anybody. But, you look at the different, the different commissions and the rules in place from state to state. I mentioned the forward-looking test year in California and the fact that future capital projects are approved and you work on schedules and so those sorts of things. Texas has just got a system improvement charge where future capital improvements can be rolled into rates more efficiently than we can here, for example. And so you look at those things as well as what are the metrics of the utility. So you take it all and you gotta look at everything, in a balance of risk, and I'm probably the wrong one to answer because I'm too close to it, and it's my team. But I don't know if that answers your question or not.
It's natural, and I'm really through. But I think I've heard more than once the either calls or complaints that turned out to be another utility. Have you considered changing the word Palmetto to something else, like, I don't know, Tiger or ABC utility or anything like that?
Well, I think, you look at consolidation and that's something that, at some point in the future, you look at, does it make sense and how is it best to maybe consolidate these utilities into larger utilities that can then absorb capital projects, as opposed to having higher and greater impacts on customers of smaller systems. You spread the dollars out over more customers. So I think you look at that, and that's where I go to when I think about rebranding and those sorts of things, because let's do things that make sense overall. And I think that's something that I'm not prepared to talk about today, but I think I'd like to have the opportunity to discuss in the future ways to consolidate and be more efficient, so that we're not in here 5 different times every other year, that sort of thing, with rate adjustments. So, but Tiger Utility would be an outstanding recommendation.
Yeah. I was going to ask this question, but I guess relative to cost, and I know you've got a lot of listed costs, and ORS reviews those in great detail, but out of curiosity, at least my experience was still the 3 biggest costs were still people, power, chemicals.
Yep.
Is that similar to PWRs?
Yeah, if you exclude, you know, the capital, you know, those are your biggest operational expenses, yes.
All right, thank you so much,
Absolutely.
Mr. Sorensen. No more questions.
Thank you.
Commissioner Powers.
Thank you, Mr. Chairman. Good afternoon, Mr. Sorensen.
Good afternoon.
I really just have one question, just for my own education. I think you told Commissioner Caston it's difficult to compare utilities and their ROEs. Isn't that exactly what we're doing in the testimony and in this presentation today?
So, you know, it is something I think you have to take a step back and look at several factors, and that was what I was intending to, you know, indicate to the commissioner, that, you know, to focus on one thing as opposed to, you know, understanding its place in context of the larger picture is difficult to do.
Well, I think I've looked at all the charts that are in evidence, and even in the ORS cross-examination exhibit 1, which we just received, and I don't see any of them that even start out asking for 10.95, and I don't see any that received even a 10% ROE once their case was heard. Is that correct in what I'm reading?
I couldn't speak to that, Commissioner. I don't know what how they went in, and maybe it's in the record somewhere, and I could look at that. But you know, I think it's also probably fair to say that I've not seen, you know, ROEs proposed as low as have been proposed as well.
I'm looking at your rebuttal testimony, page 4, and all the rates are 9.5, 9.5, 9.0. I mean, they're all less than 10. None
Yes.
of them are 10.95.
Yeah, I'm sorry, yes.
Okay, thanks, sir.
Yeah,
That's all I
absolutely.
have.
Thank you, Commissioner.
Chairman Williams.
Commissioner Williams, you have the floor, ma'am.
Thank you. Good to see you, Mr. Sorensen.
Good to see you
Thanks
as
for
well.
being here, and
Yes, ma'am.
thanks for educating some of us that didn't come out of this realm. On page 4 of your rebuttal testimony, you have got a number of affiliates of PWR that are listed there, and I wondered if this list was inclusive of all rate cases or just the ones that, you know, were of a certain level.
Right. No, this is, I think, the list of all rate cases where ROEs were discussed. But, and obviously we stopped it at some point, but anytime an ROE was, for example, Kiowa was operating margin.
Okay.
So that's why it's not here.
So, you know, you also stopped it from a time frame perspective as well, but otherwise it's inclusive.
Yes, ma'am.
Okay. Let me just double check, because some of, this is a broader question that is just informative. How was PWR impacted by COVID? And I saw some testimony related to dollars, but was there an impact?
Well, I think, like the rest of the world, COVID changed, you know, the way you operate, and you know, and the utility business was no different. We had to make adjustments for our operations, for how we handle customer care, how we you know, handle the management, how we you know, platoon our operations team, and prevent, you know, back then when COVID first came out, I'm sure everybody here remembers, you know, the confusion, concern, and you didn't know what was coming, and so you know, the operators of the system, for example, had to be very protective of them and protecting their license and their capability to turn valves and adjust feeds and all the things that the operations team does. So from an operational standpoint, you know, we had to adjust operations to guard against that. And I'm sensing that you're asking maybe more from a financial
Yes.
component.
Thank you for sensing that.
Yes. So, but I always go to, again, as I told the commissioner, I go to operations, you know, just generally as a first thought. So from a financial standpoint, I think, you know, largely we were okay. Obviously, we stayed away from disconnections. There was some impact. Our customers were largely able to withstand. It was not a serious impact like you might see, I've seen somewhere else. And the fact that the rate is already so low, that I think plays into, people that are on fixed incomes or between jobs, that sort of thing, that they're able to afford that service at that price.
And this is very unrelated, except that you said largely able to avoid, I think, disconnections and, but are you utilizing the South Carolina Stay Plus program to help with those customers that are not able?
Yes, we're educating them on that, and are looking to do some other things as well. So I'm not ready to justify those yet, but we've got other things in the works too.
I realize it's kind of tangentially related to, the financials of the company, but it was also a good opportunity to ask.
Absolutely.
Look forward to hearing more later. Thank you. No further questions.
Thank
Any more questions for this witness? Redirect.
No, Mr. Chairman.
Sir, you may step down from the witness stand. You are excused.
Thank you so much. Appreciate it, everyone.
All right. Applicant, please call your next witness.
Mr. Chairman, the applicant would call Paul Mowell to the stand virtually.
Mr. Mao, if you would, take the witness stand and pause to be sworn in by our court reporter.
If you would raise your right hand, please. Do you solemnly affirm the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
Yes, I do.
Thank you.
Mr. Mowell, would you please state your name and occupation for the commission?
Yes, my name is Paul Mao, and I am the managing consultant at the firm P. Mao and Associates.
All right, Mr. Mowell, I can hear you, but perhaps you're a little faint. Can you sit a little closer, perhaps, to the microphone?
Sure. See if that works.
Let's try it. Mr. Mowell, please give the commission your educational background.
Yes, I'm a graduate of Drexel University and hold a Bachelor of Science degree in Business Administration.
Attorney Elliott, we're going to have to figure something else out because we cannot hear Mr. Mao. Let's do this. Let's take a 10-minute recess. We'll come back at 2 o'clock to see whether or not Mr. Mao can get either some headphones or something.
We discussed his calling in, so perhaps we'll have to do the telephone.
Let's try that.
Yes, sir.
We're in recess until 2 o'clock.
Thank you.
Yes, sir.
Can Mr. Mowell hear me?
Good afternoon, ladies and gentlemen. Welcome to the Public Service Commission of South Carolina. We're here in docket number 2021-153S. Present in the hearing room are Commissioners J. Williams, Caston Powers, Belzer, C. Williams, and joining us virtually is Commissioner Thomas. Attorney Elliott.
Yes, sir. Thank you, Mr. Chairman. Mr. Mao, we had a little trouble understanding you and hearing you at the outset, and so what I'd like to do is just, if with leave of the commission, just back up a question or two, and I'm trying to introduce you to the commission before I submit you as an expert. So would you go back and tell us again about your college and post-college education?
Yes, I am a graduate of Drexel University with a Bachelor of Science in Business Administration.
Very fine. And upon graduation from Drexel, where did you first go to work?
I originally worked for American Waterworks Company in New Jersey.
And bring us forward, please, to the present and P. Mall and Associates.
After working for American Waterworks for several years, I went to work for Betts Environmental Engineering firm. And I worked there principally on municipally owned water and wastewater utility systems. Afterwards, I went to work for Associated Utility Services back here in New Jersey. I worked there for 20 years, and beginning in 1994, I formed my own firm, P. Mall and Associates.
Very fine. And just briefly, what do you do at P. Mall and Associates?
I do financial and regulatory consulting in the public utility sector.
Very fine. Thank you. Mr. Chairman, with the consent of the parties, we would proffer Mr. Mall as an expert on fair rate of return for a regulated utility, including its cost of debt, return on equity, and capital structure, and we would do so with the stipulation of all parties.
Right. The request is granted with the stipulation of all parties.
Thank you so much, Mr. Chairman. Now, Mr. Mall, let's move to your direct testimony. I've got a few questions I need to ask you preliminarily. First of all, did you cause to be prepared and pre-filed in this commission 39 pages of direct testimony?
Yes, I did.
Have you had the opportunity to review your direct testimony prior to this afternoon's appearance?
I have.
Do you have any corrections or revisions or amendments to your pre-filed direct testimony?
There are no changes I'd like to make at this time.
Very fine. So if I asked you those same questions today, would your answers be the same?
Yes, they would.
Mr. Chairman, I would move Mr. Mall's direct testimony into the record as if given orally from the stand.
Mr. Mall's direct testimony is entered into the record as if given orally from the stand.
Thank you, sir. And Mr. Mall, appended to your testimony is one appendix and one exhibit. Is that correct, sir?
Yes, that's right.
And have you had a chance to review your appendix and your exhibit prior to your appearance this afternoon?
Yes, I have.
Do you have any changes or corrections or revisions to those?
None that I'm aware of at this time.
All right, sir. Mr. Chairman, I would move the appendix and one exhibit of Mr. Mall's direct testimony into the record as a composite hearing exhibit, if I may.
Right. Mr. Mall's exhibits will be marked as a composite exhibit and entered into the record as hearing exhibit number 5.
Thank you, sir. And next, Mr. Mall, I draw your attention to your rebuttal testimony. Did you prepare and cause to be profiled with this commission 28 pages of rebuttal testimony in this docket?
Yes, I did.
And have you had an opportunity to review your rebuttal testimony prior to your appearance this afternoon?
Yes.
Do you have any corrections, changes, or revisions to your rebuttal testimony?
None that I'm aware of at this time.
All right, sir. And if I asked you those same questions in your rebuttal testimony as pre-filed, would your answers be the same?
Yes, they would.
Thank you. Mr. Chairman, I would move Mr. Mall's rebuttal pre-filed testimony into the record as if given orally from the stand.
Mr. Mall's pre-filed rebuttal testimony will be entered into the record as if given orally from the stand.
And Mr. Mall, just to be clear, did you have any exhibits to your rebuttal testimony?
I do not believe so, no.
Very fine. Thank you. Mr. Mao, have you prepared a summary of both your direct and rebuttal testimony?
Yes, I have.
Would you present that to the commission at this time?
Certainly. Good afternoon, Chairman, Vice Chair, and Commissioners. My name is Paul Mao, and I'm here today to provide the Commission with evidence of the cost of capital for Palmetto Wastewater Reclamation, Inc., also known as PWR. I am an independent financial and regulatory expert and have appeared before 37 regulatory commissions, including this commission, in previous rate cases. I have lengthy experience in analyzing the financial situation of public utility companies. PWR is a very small utility and a privately held company with no traded stock. Since the company's stock is not traded, I used a proxy group of 8 water companies that do have traded stock to measure the company's cost of equity. Traded stock prices are necessary to employ the 4 widely recognized models of the cost of equity, namely the discounted cash flow model, also known as DCF, the risk premium approach, the capital asset pricing model, also known as CAPM, and the comparable earnings method. I use the average results of the market-based measures of the cost of equity, namely those from DCF, risk premium, and CAPM, to arrive at a 10.95% cost of equity for the company using the proxy group analysis, which undoubtedly understates the company's required return due to its small size. As to the issue of size, I established that the company's actual capital structure is reasonable given its small size. My determination in this regard was based upon the common equity ratios for the smaller sized members of the water company proxy group that I used to measure the cost of equity. These small water companies are forecast to employ up to 62.5% common equity. Hence, the company's 59.92% common equity ratio that was used for the filing was within the range of reasonableness and is reasonable. In my rebuttal testimony, I responded to the ORS and BCA witnesses' proposals. Neither witness there presented evidence that altered my position that the company's proposed rate of return is reasonable. The key points of my rebuttal highlighted a variety of DCF results proposed by the ORS and DCA witnesses that are clearly too low to provide a reliable measure of the cost of equity. Most of the DCF growth rates considered by Mr. Garrett are not specific to any of his companies included in the proxy group. Thus, those growth rates are not reflective of the type of growth expected by investors in those companies. His alternative is the growth rates based on my analysis that I developed for the company. The DCF growth rate used by Mr. Rothschild provides an inappropriate measure of investor expected returns because it fails to adequately accommodate investor expectations for the water/wastewater utility business. Rather, analyst projections of future growth are the only reasonable direct evidence of the DCF growth rate, and the retention growth rate that was used by Mr. Rothschild is entirely inappropriate. Neither Mr. Garrett nor I proposed the use of retention growth, as has Mr. Rothschild. A multi-stage DCF model was also proposed by Mr. Rothschild, and in fact, it is unnecessary in this case. What the multi-stage DCF model does show is that that method provides an entirely unrealistic return that is much too low to be reasonable. It is noted in my rebuttal that the DCA and ORS witnesses have not refuted the accuracy of my leverage adjustment to the DCF and the beta component of the CAPM. I further established that a reasonable application of the CAPM requires the use of a prospective yield on 30-year Treasury bonds, a leverage adjusted beta, and a size adjustment. Additional methods should also be considered when establishing the cost of equity for PWR. I believe that the commission should set the company's return at a level that will attract investment to the company to ensure the company's financial ability to render safe and reliable service. Applying this principle, the commission should reject the proposals by Messrs. Garrett and Rothschild to cut the company's return on equity to 8.90% and 7.31% respectively. Those proposed returns are unrealistic because they are much too low to allow PWR to achieve the level of returns that meet investor expectations. Rather, the commission should be mindful of the 9.5% return on equity it granted to Dominion Energy South Carolina in November 2020. If the commission were to adopt either of the positions of the DCA or ORS, the investment community would be very concerned because it would be seen as less supportive of utilities operating in South Carolina. The return on equity used by the commission to set rates embodies in a single numerical value a clear signal of regulatory support for the financial strength of the utilities that it regulates. Although cost allocations, rate design issues, regulatory policies relative to the cost of service, they are all important considerations. The opportunity to achieve a reasonable return on equity represents a direct signal to the investment community of regulatory support, or lack thereof, for the utility's financial strength. In a single figure, the return on equity utilized to set rates provides a common and widely understood benchmark that can be compared from one company to another and is the basis by which returns on all financial assets, such as stocks, both utility and non-regulated, bonds, money markets, and investments, and so forth, how they can be measured. So while varying degrees of sophistication are required to interpret the meaning of specific commission policies on technical matters, the return on equity figure is universally understood and communicates to investors the types of returns they can reasonably expect from an investment in utilities operating in South Carolina. In summary, the commission should approve the company's proposed cost of equity and capital structure in this case. Thank you.
Mr. Mao, thank you so much. At this time, we're tendering you for cross-examination from the Department of Consumer Affairs and the Office of Regulatory Staff, and thereafter questions from the commission. Thank you, Mr. Chairman.
Thank you, sir. Consumer Advocate.
Thank you, Mr. Chairman. Roger Hall on behalf of the department. Good afternoon, Mr. Mao. How are you?
Good afternoon to you.
I'm going to start by showing you just one portion of your rebuttal testimony. Bear with me just a moment.
I have the rebuttal here, if you can just tell me what page.
Okay, and I'll put it on the screen, hopefully for those in the commission's hearing room as well, but it is page 4, and specifically lines 9 through 17.
I have that.
Okay, Mr. Chairman, can you all see that okay?
If you could expand it for us, please, sir.
Certainly. Is that better?
Yes, sir.
Okay, great. And Mr. Mao, I'll just read the question if you don't mind. Could you read the answer? How should the rate of return set by the commission support the company's financial profile?
The answer I gave, very similar to the summary I just gave. The commission should set the company's return on equity at a level that will attract investment in the company to assure the company's financial ability to render safe and reliable service. Applying this principle, the commission should reject the proposals by Messrs. Garrett and Rothschild to cut the company's return on equity to 8.90% and 7.31% respectively. These proposed returns are unreasonable because they are much too low to allow PWR to achieve the level of returns that meet investor expectations. Equity returns of this magnitude would be viewed by investors as unsupportive of the company's financial condition and would signal a disincentive for further investment in the company.
Thank you. And I realize you did, touch on most of those points. And I believe you touched on this one as well. But so you're saying that PWR would not be able to raise capital if the commission sets the ROE at 8.9 or 7.31. Is that correct?
I didn't say that directly. I said that these types of returns would provide a disincentive to continue to invest in the company.
So they could potentially still raise capital.
Well, I'm not so sure they could at those levels. I don't think that the investors would be anxious to commit capital to a company with these types of returns. Investors just would not be satisfied with these kinds of returns because they can get much higher returns elsewhere.
And I presume you have read Mr. Rothschild's, both his direct and rebuttal testimonies?
Yes.
Do you recall that he stated that Ameren, Illinois and Commonwealth Edison Company recently filed for 7.36 ROEs in Illinois? Do you recall that?
Well, I remember that, but Illinois is unique. There's the returns in Illinois are set by a formula established by statute, and the rate setting process in Illinois for electric and I believe gas companies, but electric companies for sure, employ formula rates, which are trued up and are vastly different than the types of regulation that's used in South Carolina. I do not believe South Carolina uses formula rates. And the ROE certainly isn't established by statute in South Carolina.
But regardless, that is the ROE in Illinois, correct?
Yeah, set by the legislature, developed a formula, and that's what the formula produces. In the formula rates, which are trued up. I mean, there's no, in Illinois, there's no possibility that you do not earn that return.
And are Ameren, Illinois and ComEd able to attract capital?
I would imagine they can attract capital, yes. I haven't specifically studied that issue, but I have not heard that they have any difficulty in that regard.
So I'm going to guess you're not aware that Ameren, Illinois was able to raise $350 million in debt offered on June 22nd, 2021?
That does not surprise me, no. Okay. But again, they're using formula rates in Illinois.
So, and I'm going to guess you're not aware that Ameren, Illinois, their bond issuance had an interest rate of 2.9%?
I haven't looked that up. I would accept that subject to check.
Are you aware of Ameren, Illinois' market capitalization?
I don't believe it has its own market capitalization. They're owned by Ameren out of St. Louis.
Sorry, their holding company. Would it surprise you that the holding company has a market capitalization of over $20 billion?
Oh, I can accept that subject to check. It's a very large company.
Okay, sure. Did you hear the discussion I had earlier with Mr. Sorensen about the Infrastructure Investment Fund?
I heard that exchange, yes.
Are you familiar with the Infrastructure Investment Fund?
Not at all.
So you are unaware of their relationship with Southwest Water Company?
I believe they're an investor in Southwest Water Company, but I don't know anything about them.
Did you know that before earlier today?
Oh, sure, because I've done work for other subsidiaries of Southwest Water, both in California and Texas. Okay. So I understand the structure of Southwest Water, yes.
So as Mr. Sorensen stated, then you're aware that they are the shareholder of Southwest Water Company.
Yes, I agree with that.
That's all the questions I have. Thank you. I appreciate your time.
Oh, you're quite welcome.
Office of Regulatory Staff.
Thank you, Mr. Chairman. Good afternoon, Mr. Mull.
Good afternoon.
Mr. Mull, in your rebuttal testimony, you testify regarding an ROE of 9.5% that was recently granted by the Commission to Dominion Energy South Carolina, correct?
Yes, sir.
And you, am I correct in your testimony, you described that authorized ROE as a benchmark for this case?
Yes, I would agree with that.
Do you agree that case involved a much larger electric utility?
Oh, absolutely.
And are you aware the approved ROE in that case was part of a comprehensive settlement agreement that included language stating it does not establish precedent with respect to the issues resolved therein, and no way precludes a party from advocating an alternative position in the future proceeding?
Yes, future proceedings relative to Dominion Energy, South Carolina. Right, I agree with that.
Mr. Mulder, are you looking at the settlement agreement in that case?
No, I don't think I have that in front of me, no.
Okay. So are you testifying that that provision is limited to future cases involving Dominion Energy?
I only said that because I was listening to your question and I thought I heard that as part of the question.
Are you aware, though, that that case, that provision, it does not establish precedent in any case, is the way that provision is written? Are you aware of that?
I can't respond to that.
You also say in your testimony the 9.5% reflects capital market fundamentals that are not dissimilar to today, correct?
Correct.
Am I correct, though, that you recommend a 10.95% ROE in this case?
Yes, sir.
And would you agree with me that your recommendation is 145 basis points above 9.5%?
Agree with that.
Do you recall that in two cases in 2020 in Pennsylvania involving gas utilities, Pico Energy Company, Gas Division, and Columbia Gas of Pennsylvania, you recommended ROEs of 10.95%?
Yes, sir.
And the ROE ultimately authorized in those two cases was less than 10.95, correct?
Yes, I could give you those returns. Columbia got, in its order, a 9.86% ROE, and Pico Energy's gas division got a return of 10.24%.
You agree those are gas companies, correct?
Yes.
In 2019, do you recall being involved in a case involving Clico Power LLC? In that case, you recommended an ROE of 11.0%?
I haven't thought about that one for a while. That sounds about right.
Also in 2019, in a case in New Jersey involving New Jersey Natural Gas Company, you recommended an ROE of 10.5%, correct?
Yes, sir.
And the ROE ultimately authorized in both of those cases was less than those recommendations, correct?
Yeah, I think they were all in the nines. I don't recall what the Clico one was, but New Jersey Natural was 9.6.
Thank you, Mr. Mull. That's all the questions I have. Thank you, Mr. Chairman.
Commissioner questions.
Mr. Chairman, this is Commissioner Thomas.
Commissioner Thomas, you have the floor, sir.
Thank you. Mr. Moe, can you hear me?
I hear you loud and clear, yes.
Very good. I hear you as well. Um, so let me start out. You had mentioned that the cost of equity has been impacted by the pandemic. Would you like to talk about that a little bit?
Yes, I could speak to that. The pandemic brought the extraordinarily long economic expansion to an end. And soon thereafter, the stock market had a very precipitous decline. And subsequent thereto, it's pretty much recovered. As a matter of fact, in the last period of time, and of course we aren't quite out of the pandemic, but hopefully we're getting there, the stock market's reached new highs.
Okay. And, from what I'm seeing in the news and hearing in the news is that the rates of returns are declining. Would you agree with that?
Well, I'm not quite sure how you define rates of return. If you're talking about interest rates spiked upward in February. And what's happened is within the last, I'll say last couple days, couple weeks, long-term rates have declined as short-term rates have increased. What it's wound up doing is creating a flattening of the yield curve. The yield curve normally has an upward slope to it, but with what I believe you're describing as the yield curve has flattened out. So I agree with that.
Okay. And the ROEs generally have been declining as well. Is that not correct?
Oh, yes. If you look at what's going on the last 20, 30 years or more, ROEs have come down with declines in interest rates. I would completely agree with that, yes. Of course, you got to keep in mind where we started, too. I mean, we had double-digit public utility bond yields back in the 80s, and ROEs were set, I can remember ROEs set up in the 12% area. So, yeah, I agree with what you say.
Okay. And in looking at your equity risk premium, the number that you came up with is a good bit higher than any of the other experts. Can you explain why that would be the case?
Well, it has a lot to do, and I presume you're looking at the risk premium associated with the CAPM. Let me just get my...
Right. Yes, sir.
Yeah, let me get my schedule here to make sure I don't stray too far afield. What I've done, which I think accounts for a lot of the difference, is to look at a risk premium from a historical perspective that relates to periods of low interest rates. And what we know is that as interest rates decline, the risk premiums increase, and as interest rates go up, the risk premiums decline. So since we're in a low interest rate environment, I looked at the historical data associated with low interest rates, and that's part of it. The other part has to do with the way I measured expected returns. And there I looked at both the value line forecast of the stock market returns, and I also did a DCF return for the S&P 500 as a proxy for the overall market. And I don't believe the other two witnesses followed that approach. So a lot of it has to do with the approach that accounts for the differences.
Okay. But your higher risk premium has a pretty big impact on your CAPM estimate as well, right?
I agree with that. Yes, it does.
Okay. And just a moment ago, you were discussing the rate case settlement in South Carolina. that came in at 9.5%. And that was back in November of 2020. And you had indicated that that was a pretty good benchmark. And then there was some discussions about other cases that you've been involved in other states, and the numbers that were mentioned in the other states were certainly lower than the 10.95 that's been requested here. Generally, a lot of them certainly less than 10%. I guess what I'm wondering here then is, would it not be more appropriate to have a recommended range as opposed to a pinpointed number?
That may have been a good approach, and in fact, I do that occasionally. Come up with ranges rather than just a point estimate, which is really what the 10.95 is. And I do that. Here I did not.
Okay.
Because if you establish a range, you're going to get something below the 1095 as the bottom of the range, and that would probably bring us, well, let's see, where would it bring? It'll bring you at least down to 10.41. The lowest of the results I came up with of the measures of the cost of equity I used was 10.41. So what you would get if we had followed the range approach would have been the bottom of the range at 10.41.
Okay. And the data that you used was through April 30th of 2021. And if you were to update the data to something that was more closely timed to the September filing of your testimony, what impact would you think that would have?
I haven't done that, but I don't believe it would have had a large impact, because I do these types of studies for other types of utilities. I haven't really done another water case recently, but I do this type of thing for other utilities, and later data is showing pretty much a consistent ROE.
Okay. Thank you. That's all I have at this time.
You're welcome.
Vice Chair Belzer.
Good afternoon, Mr. Mole.
Good afternoon.
Mr. Mole, there has now been a stipulated capital structure in this case. Would that change your recommendation any?
No, because if I heard what the stipulation was, and actually I wasn't aware of it until this morning.
We weren't either.
I think if I heard it right, the equity ratio was going to be 55%, and that's not a large enough difference between the 55 and 59 that would warrant a change in my recommendation.
Okay, thank you. With regard to your DCF model, was the dividend growth factor that you utilized historical or forecasted?
It was, I'm sorry, can I have that question again?
Sure. In your DCF analysis, was the, dividend growth factor, was that a historical or forecasted growth factor?
It was forecast.
Okay. And what is the justification for that growth factor?
What I looked at was a analysis of a variety of growth rates forecast by analysts. And the reason I did that is that the evidence indicates that analyst forecasts are the best measure of investor expectations of dividend growth in the DCF going forward.
And,
There's a very famous, I'm sorry.
no, go
There's
ahead.
a very famous study by Gordon and Gould that substantiates that.
And, is that the 7.50% growth rate?
Yes,
No,
ma'am.
I'm
Yes.
sorry, that is?
Yes. Mhm.
So that I noted you indicated in your testimony on page, let's see, 25. I'm sorry, I'm on page 26. I know of no means to well, that's the, never mind, that's a different issue. Let's look at, your risk premium on page, I think that's on page 34 of your testimony, around line 11. I'm sorry. I am a bit mixed up here. 31 on 11 that you, in your, you used a 6.75 equity risk premium. Is that correct?
Yes, ma'am.
And how was that derived?
That was derived from the table that's shown further up on that page.
Okay.
The table between lines 4 and 5.
Right?
And I picked a number that was slightly greater than the 6.63, which was the calculated value for the equity risk premiums during low interest rate environment, because in fact, interest rates today were even lower than the low ones. So since we have this relationship between interest rates and risk premiums, since interest rates were so low, I bumped up the 663 to 6.75%. It's, somewhat higher, but not a lot, in recognition of what interest rates are expected to be.
And then in your CAP-M analysis, I'm on page 36. The beta you used is 0.92, is that correct?
Yes,
And you call that the leverage adjusted beta?
correct.
Can you explain that to me, please?
Yes, the actual beta, the Value Line publishes for the water proxy group I used was 0.78. And when I unleveraged that beta, in other words, took all the debt out of the capital structure, that beta falls to 0.60. And then when I re-leveraged the beta for the company's capital structure, which at the time I prepared the case of 59%, the calculation produced 0.92.
And earlier in your testimony on about page 23, you talked about a leverage adjustment in relation to the DCF model. Is that the same type of leverage adjustment used for this beta?
Yes.
Okay.
The DCF uses something called the Modigliani-Miller formula. One or both of them, I can't remember which, won a Nobel Prize. And then a fellow came along much later, Robert Hamada, and took the same principles and then applied it to the beta.
And I remember reading in your testimony about a flotation adjustment. Did you utilize a flotation adjustment in any of your models?
No, I did not.
Okay. Thank you very much for your testimony today. Mr. Chairman, that's all I have.
Any more questions from commissioners for this witness? Redirect.
Mr. Mao, you recall having some discussion with the ORS counsel, Mr. Huber, about the Dominion ROE of 9.5%.
Yes, I recall that.
And in your exchange, Mr. Huber addressed a small matter I'd like to get out of the way. Do you recall Mr. Huber asked you whether you understood that the settlement agreement in the Dominion rate case had provisions in it that made it non-binding or precedental? Do you recall that exchange?
I remember that.
And do you recall that that exchange was prompted by your response to Mr. Huber's question to the effect that you did not understand Palmetto Wastewater Reclamation to be bound by the settlement agreement in the Dominion rate case? Do you recall testifying to that?
Yes.
And it stands to, and you're familiar with this company, and you understand that Palmetto Wastewater Reclamation was not a party to the Dominion rate case. You understand that, don't you?
Oh, absolutely, sure.
Now, you are aware, sir, are you not, that the order in the Dominion case came down on August 16 of 2021? You understand that it was issued in that general time frame, don't you?
I thought it was November of 2020.
Well, would you subject to check accept August 16, 2021, please?
Sure, I could.
And when you've been involved, you've been around in this a while, and you are aware that oftentimes these utility rate cases are settled. You're aware of that, aren't you?
Oh, sure. The vast majority are settled.
And you're aware that in cases of settlements, such as in this case, where we have a partial settlement, the Public Service Commission must at least review sufficient evidence to determine that the settlement is fair, just, and reasonable. Isn't that the case?
Correct.
And so it would be fair to understand that when this commission approved an ROE of 9.5% to Dominion on August 12 of this year, that the commission found that that 9.5 ROE was fair, just, and reasonable. You would accept that, wouldn't you?
I would.
Now, you were also cross-examined by Mr. Huber with respect to your testimony that the 9.5% ROE for Dominion was a, as you put it, a benchmark for this case. Would you please elaborate on that, elaborate on your answer to Mr. Huber?
Yes, I view the 9.5 as the type of return that investors are familiar with when it comes to resolution of rate cases in South Carolina. And I would believe that if there was a marked departure from a return around that, and I'm not talking about 9.5 being a hard and fast and precise number that would always be applicable, but investors would be concerned if there was a marked departure from returns in the mid-nines, and would then be concerned about how supportive the commission is of the utilities that operate in South Carolina.
Well, would it be fair to say then that your testimony is on rebuttal, and your testimony today is that were the commission to reject your number, but find that that conformity with rates of return merit a 9.5% ROE in this case, would you consider a 9.5% ROE in light of your testimony to be fair, just, and reasonable?
Well, some would view it that way. Obviously, the commission did. I believe the return that I came up with is the right return. But I also am mindful of the fact that other witnesses come up with other returns. All we have to do is look at Mr. Rothschild or Mr. Garrett's testimony. But what typically happens is that the commission has to exercise its judgment because its job is to balance both the interests of investors and customers. And often commissions come up with returns that are between those proposed by the various parties. I mean, it's common. It happens all the time.
So then do I understand your testimony to be that if this commission set an ROE of 9.5% in this case, it would be reasonable given the state of the record?
Yeah, that would not be an unexpected outcome for the resolution of this case in the minds of investors.
And therefore, for that reason, it would be a reasonable result, would it not?
Well, at least in the mind of the commission, it would be, yes. And
Yes,
I
sir.
think that investors would be receptive to that.
Very fine. Thank you. No further questions, Mr. Chairman. Thank you so much.
Recross. Department of Consumer Affairs,
No, thank you, Mr. Chairman.
Office of Regulatory Staff.
Very briefly, Mr. Chairman. Mr. Mole, this is regarding your exchange just a moment ago with Mr. Elliott about the Dominion rate case settlement. Would you agree that a settlement really should be viewed in its entirety, that there's gives and takes, and that there were asked the gives and takes as part of any settlement?
I would agree with that, yes.
Thank you. No further questions.
Sir, thank you for your testimony. You may step down from the witness stand and you are excused.
Thank you, Your Honor.
Thank you, Mr. Chairman.
Does that complete the applicant's case?
It will with a little more housekeeping work that Ms. Wheat would never let me forgive if I forgot. She's already reminded me. If you recall, as a part of the partial or the settlement in this matter, the parties have agreed to stipulate in the testimony of Mr. Burkett and Mr. Hafiz, and I don't think we have done that yet. So at this point, we would tender by stipulation the testimonies of Mr. Hafiz, direct and rebuttal, and Mr. Burkett, direct and rebuttal, with exhibits at this time. We will supplement the record with verifications for both, and with that, that completes the applicant's case.
Okay.
Thank you, Mr. Chairman.
Okay. All right, so Mr. Hafiz, 4 exhibits will be marked as a composite exhibit and entered into the record as hearing exhibit number 5, hearing exhibit number 6, excuse me, with the confidential portions remaining under seal. All right. Okay, is there anything else? All right. Six. And the testimony of Mr. Hafiz will be read into the record as if given orally from the stand, direct and rebuttal. And Mr. Williams is adopting the testimony of, or Mr. Burkett's testimony directed in rebuttal can be read into the record as given orally from the stand. Are you going to file verifications? Yes, sir. All right. Thank you, sir. Or thank you, gentlemen. Anything else from the applicant?
Nothing else from the applicant.
All right. All right. South Carolina Department of Consumer Affairs.
Yes, sir, Mr. Chairman, thank you. I guess our only witness at this point, given the prior stipulations in the record, will be Mr. Aaron Rothschild.
Mr. Rothschild, if you would please take the stand and pause to be sworn in by the court reporter.
Yes.
If you would raise your right hand, please, sir. Do you solemnly affirm the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
Yes, I do.
Thank you very much.
Thank you. Mr. Rothschild, can you please state your full name and business address for the record?
My name is Aaron Rothschild. My business address is 15 Lake Road in Ridgefield, Connecticut.
And by whom are you employed in what capacity?
Rothschild Financial Consulting, and I'm president.
And how long has your company been in existence?
Since 1985.
And what type of services do you provide?
We provide U.S. Public Utility Commission's financial tools and expert testimony to assist in rate case settings for regulated utility companies. And we have additional clients that include other related areas in finance, such as electronic trading firms and other environmental groups to deal with regulatory and financial issues.
And what is your educational background?
I have a bachelor's in arts in mathematics from Clark University, and I have a master's in business administration from Vanderbilt University.
Okay. And what is your, can you tell me a little bit about your employment history?
Right after business school, I started working at a major U.S. telecom firm in the United States and Asia Pacific, and that was from 1996 to 2001. And that included serving as head of business analysis in Tokyo, where I worked on the national expansion plan in Japan for our fiber optic network. I also worked in investment banking consulting for 2 years in New York City. And as an affiliate of the New England Complex Systems Institute, I worked to address problems and opportunities in the power sector related to resilience and interdependent systems.
Thank you. How long have you been preparing rate of return testimonies?
I've been, the first testimony that I filed, I believe, was 2005, but I've been involved in, that was for me as a witness, but I've helped in assisting for, now it's about 20 years.
And during that time, how many different cost of capital proceedings have you been involved in?
It's over 50, but I believe it's now over 75, or about 75.
And in what various states have you submitted testimony?
I've submitted testimony in California, Connecticut, North Dakota, Pennsylvania, South Carolina, and I hope I'm not missing one. I think also New Hampshire. I don't have it.
And I believe maybe the complete list is probably in your testimony.
Yes.
Mr. Chairman, as stipulated by the parties and mentioned by Mr. Elliott previously, I would tender Mr. Rothschild as an expert on the fair rate of return for a regulated utility, including its cost of debt, return on equity, and capital structure.
Mr. Rothschild is qualified as an expert in the stated areas.
Thank you. Mr. Rothschild, did you prepare 105 pages of direct testimony for this docket, which is filed on September 30th, 2021?
Yes, I did.
Did you also prepare 20 pages of surrebuttal testimony, which was filed on October 28th, 2021?
Yes, I did.
Do you have any changes or corrections to your testimony?
I have one in my surrebuttal testimony, which was On page 15, lines 9 to 10, it should be changed from Exhibit ALR 6 S to Table 1 below.
Other than that revision in your sir rebuttal testimony, if I asked you the same questions today, would your answers be the same?
Yes.
Mr. Chairman, I will note I do need to submit the correction Mr. Rothschild just noted. However, I would move to have his pre-filed direct and sir rebuttal testimonies entered into the record as if given orally from the stand.
Mr. Rothschild's pre-filed direct and sir rebuttal testimonies will be will be read into the record as if given orally from the stand.
Thank you. Mr. Rothschild, did your direct testimony include attachments labeled Appendix A, Appendix B, and Exhibits ALR 1 through ALR 6, totaling 24 pages?
Yes.
Mr. Chairman, I would move to have Appendix A, Appendix B, Exhibits ALR 1 through ALR 6 collectively entered as the next applicable hearing exhibit, please.
Appendix A and B, along with Exhibits ALR 1 through 6, will be marked as a composite exhibit and entered into the record as hearing exhibit number 7. And you're going to file the corrected version of ALR 6.
Yes, sir. We'll get that filed as soon as we finish today.
All right, thank you.
And let me correct that. It's corrected sir rebuttal testimony.
I'm sorry, the corrected sir rebuttal testimony. Thank you.
Thank you. Mr. Rothschild, would you please summarize your recommendations for the commission?
Yes. My direct testimony provides my recommendation to the Public Service Commission of South Carolina regarding the appropriate cost of equity, capital structure, and overall cost of capital for Palmetto Wastewater Reclamation, Inc. In summary, I recommend the following cost of capital for PWR's wastewater operations. 1, an overall cost of capital or rate of return of 5.47% from a range of 4.88% to 5.66%. 2, a cost of equity or ROE of 7.31% from a range of 6.13% to 7.7%. A capital structure containing 49.26% common equity and 50.74% debt, which reflects the capital structure of my proxy group. And 4, a cost of debt of 3.67%. To arrive at my recommendation, I applied the DCF, including a constant growth and non-constant growth method, and a capital asset pricing model or CAPM analysis to a proxy group of 7 regulated wastewater utility companies using data available through August 31st, 2021. My capital structure recommendation is based on the average common equity ratios of the 7 companies in my proxy group. My 3.67% cost of debt is based on the average market yield of BAA-rated corporate bonds between 2019 and August 2021. PWR is requesting an overall rate of return of 8.08%, a return on equity of 10.95%, a capital structure containing 59.92% common equity and a 40.08% debt, and a cost of debt of 3.79%. The company's rate of return request, if adopted, would require consumers to pay about $470,000 more annually, and if my recommendation was used to set rates. I recommend an ROE range of between 6.13% and 7.7%, and a specific point within that range of 7.31%. It is encouraging that many recent authorized ROEs for regulated utilities are more in line with the market-based cost of equity. Bringing authorized ROEs in line with the market-based cost of equity benefits consumers and business owners. I'm recommending a 7.31% ROE for PWR instead of the 6.92% midpoint of my recommended range, because I believe it is prudent and to not be overly abrupt while bringing ROEs in line with the true market-based cost of equity. ORS's witness, Mr. Garrett, agrees that it is prudent to bring authorized ROEs in line with the market-based cost of equity over a period of time. However, we disagree on how long customers should be required to pay utility services based on above the market cost of capital. Mr. Garrett recommends an ROE of 8.9% despite calculating a market-based cost of equity of 7.1% with a range of between 6.3 and 8%. Asking consumers to pay rates that are based on an ROE that is 180 basis points higher than demanded by equity investors goes against regulatory principles and is not fair to consumers. Numerous recent authorized ROEs for water and electric utilities have been between 7.36% and 7.9%, including an ROE of 7.46 for South Carolina's Blue Granite Water Company. Stepping back from financial models and spreadsheets, we can see that Ameren, Illinois, despite recent authorized
Mr.
ROEs,
Rothschild,
6%. Yes?
for some reason, your microphone went out on us. Could you start that sentence again, please, sir?
Yes. Stepping back from financial models and spreadsheets, we can see that Ameren, Illinois, and ComEd are able to raise the capital they need to provide safe and reliable service despite recent authorized ROEs of 7.36%. Major banks and brokerage houses such as JP Morgan, Morgan Stanley, and Charles Schwab expect equity returns over the next 10 to 20 years to be between 5.5% and 8.5% for the overall market. The overall market is riskier than regulated utility companies like PWR. Therefore, these publications indicate that my 7.31% cost of equity recommendation is more than sufficient for PWR to attract the capital it needs to provide safe and reliable service. A 7.31% ROE for PWR makes sense. An ROE above 7.31% is a windfall to PWR's investors at an expense of South Carolina's consumers.
Thank you. And how has PWR responded to your recommendations?
PWR witness Mr. Sorensen claims that if my 7.31% ROE recommendation is adopted, quote, it will put PWR at a distinct disadvantage in attracting capital. In my opinion, this is a distortion of financial reality. Mr. Sorensen, in his rebuttal testimony, shows authorized ROEs for PWR's affiliates that range between 7.85% and 10.55% in 5 states, including South Carolina. Even if it were assumed that all historical authorized ROEs of wastewater and water utility companies and other proceedings are based on accurate market-based cost of equity calculations, they are from the past. The cost of equity should be based on current market conditions, unless authorized ROEs are set based on investors' current expectations, as indicated by market data. At the time of the proceeding, the resulting rates charged to consumers would either be too low to permit a utility to raise capital on reasonable terms, or too high, such that ratepayers would be overcharged. PWR witness Mr. Mal also claims that my 7.31% ROE is too low. He attempted to support this claim by fundamentally distracting us from the purpose of rate of return regulation. The purpose of rate of return regulation is to set the authorized ROE based on investors' expected return. And the return investors expect to receive is based on the market price of securities. In other words, it should be market-based. On page 5, line 15, and page 6, line 1 of Mr. Mal's direct testimony, he states that his proposed equity return is market-based. However, despite mentioning capital market data, he often defines the cost of equity as accounting returns, which are returns on book equity instead of returns on market prices. For example, Mr. Mal claims that my testimony shows investors expect to earn a 10.8% return on the market price of equity is a mischaracterization of the cost of equity, because the 10.8% is an accounting figure based on expected return on book value of equity, not investors' returns based on expected return on the market value of equity. In order for investors to earn a 10.8% return on their investment, they would have to be able to buy the shares of water utility stocks at the book value. But that simply is not possible. The average market price for water utility stocks in my proxy group is between 3.5 and 4 times book value. If you were to log into your brokerage account, you would not be able to purchase American States Water stock for $37.95, its current book value, according to Value Line. Instead, you would have to pay $173.22, the closing price as of October 27, 2021, according to Yahoo Finance. Mr. Mal's claim that a future expected return on book equity of 10.8%, an accounting return, for a group of companies with a market-to-book ratio of 3.5 to 4 is like calling a blue sky purple. If investors are willing to pay between 3.5 and 4 times the book value of an expected 10.8% return on book value for water utilities, they are expecting to earn a return significantly less than 10.8% return on the market value. It makes sense that my DCF market-based cost of equity is between 8.5 and 8.15%. In my opinion, Mr. Sorensen and Mr. Mal's testimonies fundamentally distort financial reality and should be disregarded.
And do your recommendations comply with established case law?
Yes, if adopted, my recommendation would allow PWR to raise capital on reasonable terms while fulfilling their obligation to provide safe and reliable service. My recommendations satisfy the requirements of Hope and Bluefield that regulated utility companies should have an opportunity to earn a return commensurate with returns on investments in other enterprises having corresponding risks.
How has today's financial market impacted the cost of equity?
The spread of COVID-19 caused a financial crisis. However, financial data indicate that the capital market upheaval in general was not long-lasting. It did not significantly impact the cost of equity for water utilities. Investors know that water utility companies provide an essential service that will be used and paid for even during a financial crisis. Although stock and bond prices remain more volatile than before COVID-19, market data shows that investors' volatility expectations have declined for both the overall market and water utility companies since the onset of COVID-19 in March 2020. Investors' volatility expectations are important, but investors' expectations regarding the covariance between water utility stocks and the overall market are more relevant to cost of equity than volatility expectations alone. As explained in my direct testimony, I use stock option data to calculate an option implied beta, which is a measure to determine what investors' expectations are regarding the covariance between the expected returns for the RFC Water Proxy Group and for the S&P 500 Index. Option implied betas indicate that investors expect water utility stock price movements to be less correlated with the overall market than before the pandemic. Declining water utility option implied betas indicate that investors understand that water utility companies provide an essential service that will be relatively unimpacted by the overall economy and point to a lower cost of equity.
And how did you calculate the cost of equity?
To arrive at my recommendations, I applied the discounted cash flow model, DCF, including a constant growth and non-constant growth method and a capital asset pricing model, CAPM, analysis to a group of similar companies, a water proxy group, using data available through September 30th, 2020. My constant growth DCF model is used by major financial institutions. JP Morgan Chase uses the sustainable growth form of the DCF method as I do in its 2019 long-term capital market assumptions publication. Principles of Corporate Finance, a leading financial textbook used in business schools and investment banks around the world, recommends using the very same method I use to calculate the cost of equity for regulated utility companies. As discussed in my direct testimony, my CAPM is based on methodologies used by Value Line, the Chicago Board of Options Exchange, and published in peer-reviewed academic journals, e.g. the review of financial studies. My sustainable growth form of the DCF model is more reliable than mechanically adding an analyst earnings per share growth rate to the dividend yield, as Mr. Mal has done. The sustainable growth rate is more reliable because it maintains a mathematical relationship between the earnings, dividends, book value, and stock price that must be respected. The non-constant growth form of the DCF model determines the return on investment expected by investors based on an estimate of each separate annual cash flow the investor expects to receive. For the purpose of this computation, I've incorporated value line detailed annual forecasts to arrive at these specific non-constant growth expectations that an investor who trusts Value Line would expect. The CAPM relates return to risk. Specifically, it relates the expected return on investment in a security to the risk of investing in that security. The riskier the investment, the greater the expected return, i.e. the cost of equity. Investors required to make that investment. The equity risk premium component of my CAPM is based on investor expectations as indicated by the prices of stock options traded on the S&P 500. The betas I use in my CAPM are superior to using betas based exclusively on historical data because the past may not represent current investor expectations, especially during the global pandemic.
Thank you. And what are your concerns with PWR's cost of equity calculations?
First, Mr. Mal does not use the most current market data, e.g. stock prices, interest, and interest rates. His analysis only includes data up to April 30th, 2021, despite filing his testimony on September 2nd, 2021. This is particularly concerning because water utility stock prices have significantly increased over that time period. Those stock prices are up 25.9% in the 6-month period of March through August 2021, indicating a lower cost of equity. Also, interest rates have declined, indicating a lower cost of debt. Second, we have fundamentally different analytical approaches. I focus primarily on using market data, stock prices, bond yields, stock option prices, to measure investors' expectations as much as possible. On the other hand, Mr. Mal relies also on non-market data, including economists' projections, interest rates, and analysts' forecasts, such as 5-year earnings per share growth, to inflate his results. Third, Mr. Mal makes inappropriate adjustments, his leverage and size adjustments, to his model results that go against regulatory principles and the results of recent research. As discussed in my direct testimony, Mal's conclusion that smaller firms require a higher cost of equity is not supported by the evidence, and therefore PWR's consumers should not be charged higher rates because of its size. Even if we accept the controversial conclusion by some of the studies cited by Mr. Mal, including research from the 1990s, that small firms have a higher cost of equity, it is not appropriate to assume this research applies to PWR. PWR is a subsidiary of Southwest Water Company and therefore has access to financial and technical resources that are not available to standalone small companies. The 10.95% ROE recommended by Mr. Mal and requested by PWR is considerably higher than return expectations published by major consulting firms, brokerage houses, and major data publications, which range between 5.5% to 8.5%. As discussed at length in my direct testimony, PWR's witnesses' ROE recommendation is above current investor expectations for numerous reasons, including flaws in his models and his decision to not rely on investors' interest rate forecast incorporated in current market yields. The non-market-based interest rate forecasts used by Mr. Mal are not only irrelevant because they are not consistent with investor expectations, they also have been consistently inaccurate for decades. Furthermore, analyst earnings forecasts used by PWR's witnesses' discounted cash flow analysis have been shown to be overly optimistic. Determining the appropriate cost of capital is a delicate balance. If the cost of equity and overall cost of capital is set too low, PWR will not be able to access the capital needed to to provide safe and reliable service. However, charging consumers above the current market rate for capital is not appropriate or necessary to assure capital is available and will result in an unjustified windfall to PWR. If Mr. Mal's 10.95% cost of equity recommendation, Mr. Mal's 10.95% cost of equity recommendation is well above the equity return expectations of the financial industry. As I mentioned earlier, his cost of equity recommendation is also considerably above allowed returns in recent electric and water rate cases. My cost of equity calculations show an appropriate ROE for PWR should be between 6.13 and 7.7%. Because I have often been asked to provide a specific number, my recommendation is 7.31%. However, any ROE in the range will satisfy the requirements of Hope and Bluefield that regulated utility companies should have the opportunity to earn a return commensurate with returns on investments in other enterprises having corresponding risks. My recommendations are consistent with legal standards set by the United States Supreme Court and market data. My cost of equity and an overall cost of capital recommendations will allow PWR to raise capital on reasonable terms while fulfilling their obligations to provide safe and reliable service.
Thank you. Does that conclude your summary?
Yes.
Mr. Chairman, Mr. Rothschild is available to answer questions from other parties in the commission.
All right, thank you, sir. I see now that it's 3:25, so we have about 20 minutes before we recess. Does the applicant have cross-examination? Yes, sir. I would imagine. Office of Regulatory Staff?
No, Mr. Chairman, we do not cross.
Okay. All right, so let's do this. Let's start on Friday at 2 p.m., I believe is the scheduled time for us to start back on Friday. Is that correct, Attorney Butler? Yes, sir. All right, we're in recess until
correct.
Friday, 2 p.m.